Thing I'm going to point out, and I've talked about it before, that the 95.4% Laplace distribution range to the top side on both these projections today, they literally came together, right? And so what happens as soon as we open today, right? We open today, price action shoots up. Short sides the 68.3% Laplace distribution range by literally not even 50, probably 25 bucks, 30 bucks or something right here. You can see where it did reject to the dollar off of once again, all right? The alpha trading volatility range estimator, price action volatility ranges, wick direct to the top side, rejection from there. Rejection from there. Let's take a peek here. Let me see. And you can also see what was right at that top side 68%, 68.3% Laplace distribution range. The bottom side of the weekly volatility price action range, right on top of each other. So immediately, you know, so the top side of the daily and the bottom side of the weekly in the 68.3, that's a magnet for price action. Worked out perfectly. Always does. Right? We reject from there immediately. Now I'm going to point this out. Once you see this 15-minute candle, we get one little rejection off the bottom side, right? Pulls back up. Next 15-minute candle closes underneath the bottom side of the 68.3 Laplace distribution range. We get open up a new 15-minute candle, pumps up to the dollar to the bottom side. When that rejection happened on that 15-minute like that, I've already looked at the charts. It was all set up on the 5-minute. No-brainer. No-brainer trade right there. Okay. You can see what happened. We sent a wick down to, I believe, about 58.1. Yeah, 58.1. Let me get this open here. Yeah, 58.100 to the T. And obviously there was algos down there waiting, right? Pulled back up. What did it pull back up inside of? Right? And this is what was crazy. I went to bed probably about 10 o'clock. I got some Discord notifications like at 1 o'clock in the morning, and I woke up and it was somebody I was eager to speak with. So I freaking rubbed the sleep out of my eye and started messaging back and forth on Discord with somebody and saw the price action. And I was like, you know, if I would have just made, sometimes I'll stay up till midnight or 1 o'clock to see that 4-hour close, and that would have been a no-brainer trade. Anybody on the other side of the pond that was able to catch this trade, kudos. Now, what's been going on all day? What's been going on all day? We've pretty much just been ranging right around the 4-hour, every 4-hour candles, 68.3 Laplace distribution range, or their first standard deviation normal distribution range. That's all that's been going on right now. So what am I thinking about price action right now? Well, number one, right? There's only one way to take a look at a random market. Are the markets random? Yes, 100%. 100% of the time, the markets are random 90% of the time. How you like that? So how do you gauge how to read this price action in a random market, right? People think it's impossible, or they're going to use some wild stuff, you know? I mean, and here's one thing I want to point out for sure, right? I always talk about there's 3 things in trading you must learn. I don't care if you trade volatility, probability, and statistics. I don't care if you trade freaking traditional technical analysis. I don't care if you're trading tea leaves, right? You cannot be emotionally attached to your trades. And when you're not emotionally attached to your trades, that allows you to, number one, take your profit. Number two, limit your loss. I don't care if you're throwing darts at a dartboard. Up, hit red, okay, let's go short. Up, hit green, okay, let's go long. The trade goes against you, get the hell out of the trade. Limit your loss. When that dart hits right, or whatever the hell you're looking at on the charts, that's now the main reason why we trade volatility, probability, and statistics is because of the great entries we get. And ones that do trade that way, their PnL speaks for itself. Very seldom are we losing trades. And if we do, the losses are so limited and the gains are so impressive that the PnL skyrockets, right? We pride ourselves on that at Alpha Trading. But, not being emotionally attached to your trades, when you're able to take profit and you're able to limit your losses, you could become a profitable trader. We just choose to trade with the smart money. That's all. Nothing against anybody else out there trading whatever style they want to trade. Everybody's going to trade a different way or have bias to a certain way, right? We want to trade with the great white sharks, right? The algos, the high frequency trading firm algorithms that make up 90% of this trading volume you're seeing. I don't care what market it is, right? And it's pretty obvious when you look at the distribution levels day after day after day, when you look at the price action volatility ranges, and when you look at the statistical indicators that will let you know what the algos are thinking about when they're getting ready to make their move and start eating those minnows, right? So once you start day after day after day, you start to realize what the algos are programmed with. It does not take a brain surgeon to figure it out very quickly. And once you come and you start trading this way, I can assure you, you'll probably never go back. You'll be shocked at what you see, right? And then you'll start to realize that's why the smart money's been calling retail traders the dumb money for all these decades. There's a reason. And I'm telling you right now, this type of trading has been around for decades. And the day that algorithmic trading came onto the scene, this is what they were programming their algos with. They might say something different. It's okay, Andy, we have a recorder. They might be saying something different. That's just to mislead, right? They want an endless supply of retail traders on the other side of their algorithmic trades. That's about all I can say about that. It's pretty obvious once you start looking at the volatility, probability, and statistic charts. So for majority of the day after this next leg down, right? We've been legging down. Just going sideways right now. Now, let's get over here. I've been talking about this. Look at these wicks. Support, 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 closed on support, right? Closed on support. But at the same time, there was some weak bear div on the returns and price action. So I was like, well, let's just see what happens. Unfortunately, I fell asleep before I could, take a nice trade. But you can see what happened. Opened up, went up, tested at 68.3. Now, the way it's looking, we're going to close a daily candle below that 95.4 Laplace distribution range. Now, do I think we're going to come down here and test the 68.3 at like 45K? It's a probability. No doubt about it. It's a probability. But I don't think it's going to go that low. So what do I do as a trader? I'll show you what I do. First, let me turn off PB2. Am I on the index? I am. Let's go to a weekly chart. Okay, I'm moving up in time frames. I'm seeing what the intraday is telling me on the daily and down through the time frames. It's looking like this thing wants to test some lower levels, right? So instead of looking at data set support and resistance levels, which this is what I'm explaining to somebody in a different Discord server. Look, you can trade support and resistance all you want. That stuff breaks. Why does it break? Because volatility is creating the real support and resistance levels, right? And what is the standard deviation of returns? Volatility. We can't say this enough. And I will pound that into people's heads until they understand that. Volatility creates everything. So, can you depend on these probability levels? In my opinion, yes, you can. But when you get to these probability levels, you need to look at the volatility. What's the volatility telling you? Does this have enough power to bust through that range and maybe go to a lower level, or bust up through that higher range up to another level? This is why when, as a volatility trader, when we are trading, we are sitting at our workstation trading. These are very important levels, and you have to incorporate all this stuff together to understand what's going on with the market. So where do I think this is going? This is the weekly. Okay, best case scenario, we're about to go down and test this first standard deviation on the weekly. So it's a tick under 55K, right? That's the best case scenario, right? Now, at the extreme level, if this really wants to shake some longs out, right? Because what happened again? Bitcoin had that good day the other day, and what happened? The longs started piling on. So did the shorts, though. And I'm pretty sure right now the shorts are outweighing the longs, but they started piling on again at the top. It makes 0 sense. If you understand volatility, you would have never thrown a long on there, because you see what's going on. So at the extreme, maybe a 94 or 95.4% Laplace distribution range to the downside. That's about 51K. So I'm looking at these two levels. I want to see what happens when Bitcoin gets down to this 1 SD on the weekly. Why do I think that's going to happen? Well, number one, there was some bear div between returns and price action. Number two, on this weekly, there's no bull div building, right? You can see everything that's going on. If you're in a short right now, these returns are telling you this is a great return on your investment. Stay in this trade until you're told otherwise by the volatility, probability, and statistics chart. So I'm looking for a move down to the 1 SD first. That's going to be the first level, right? And there's some people out in crypto YouTube land that understand volatility. They understand true support and resistance ranges. And there's a lot of people, there's not a lot, but I know of a couple that are literally talking about the 55K range. Why am I talking about the 55K range? Because it's the first standard deviation on normal distribution on this weekly candle. And I'll say it again. This is why I'm watching the volatility. The standard deviation of returns is volatility. This is why I continue to talk about this, and this is why I'm sitting here saying price action is probably going to come down and test this area. If we close the daily candle before the end of this week below there, look for a possibility to get down to that 95.4 Laplace. But here's the thing: we reach this first standard deviation or the 95.4 Laplace distribution range, we could get one hell of a bounce out of there. Why do I say that? Because this is all algorithmic trading moving this market. And somewhere, one of these positions, these great white sharks are just down there waiting. What are they waiting for? First off, they're waiting for these shorts that probably will not take their profit because they're bears. Bears just love to be bears. Just like they talk about the Joker, right? Some men just want to burn the world. That's how I always see the bears, right? They just want to see the world burn, man. It doesn't make any sense to me, but I don't care, right? If the algorithms are telling me, hey, be a bear today, I don't look at it as being a bear, but I look at it as trading the volatility expansion that's negatively correlated. When volatility expansion happens, it's negatively correlated. Price action is going to move to the downside. When there's volatility expansion and it's positively correlated to price action, that price action is going to move to the top side. These are the basics of volatility trading, and you would be shocked to realize how many people don't understand this basic fact about why we do what we do, right? Even the guy who I don't like was my volatility mentor. He got me on the right track. Did I sit around and ask this guy question after question after question? No. He put me on the right track. I started showing the results. I started pushing this thing forward. Okay. That is what happened. Right. And now I expect people to do the same thing. Right? There's plenty of things in our Discord to get you on the right track to study. Lots of stuff in all of our EDU channels about math and statistics and things that'll make you realize, holy crap, it only makes sense that these algos are trading on this stuff. And then once you start looking at the probability charts, bang, ding, 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 once you start understanding the divergence between returns and or log returns and price action, it's going to change your trading up 100%. You'll be shocked at what you start to see. All right, so that's what I'm looking for. I'm looking for a 1 SD move to the downside on the weekly. At minimum. How am I going to know? Because like I said, those algos, these high frequency trading algos are going to be waiting somewhere. And it's going to spring out of that hole, right? Because Bitcoin's bullish. Bitcoin has got plans, right? This thing is moving. It wouldn't shock me at all if we do this in the next couple days, go down here and test this 1 SD to rocket ship and do a 1 SD move to the top side. And that's back up about 67.5. How many people you think could get wrecked there? A lot. So this is what I do, right? Like right now, where is my capital? Where do I see my capital being best utilized right now? Shorts, right? So I'm looking on my main trading chart here. I'm looking for shorts, right? That's what I'm looking for. Now look at this 4-hour chart from the top here, right? So let's take a peek here. You can see right here, especially, there we go. You see right down here, this is our alpha volatility score. This is the Z-score of historical volatility. Look right up here, right, where it starts expanding again. It's heading into negative correlation, right? When you get expansion on volatility and it's negatively correlated, price action is going to come to the downside. Now it's starting to expand again, right? And what finished off this move? Volatility contracted, positively correlated. It started out with a move to the downside. Actually, the move started out, it was a little bit of contraction and positively correlated here. You see it? It was actually contracting the whole time, positively correlated. Price action starts walking down. We get the expansion, negatively correlated. Price action dumps. Then right down here, right, where volatility starts to expand again, or right here when volatility starts to contract again, it's positively correlated, and it walked that candle all the way down. Now the volatility, it is expanding a little bit. If you, and I'm telling you, right, is that's heading back down. Right now it's negatively correlated, expanding, right? That's why you're actually seeing a doji. Let's see why. Well, here's the biggest reason. You got flat volatility negatively correlated on the 2400. That's going to walk price up. Look at these. Look at the, let's see, the 636 length on the AVR. Positively correlated, contracting. Price action is going to walk down, right? At the same time, we got a little bit of contraction, negatively correlated. So right now, we're just having a battle between these different lengths right here. What's the trend telling you on our entropy indicator, right? This entire move from this candle down, this is all trend. That's what the entropy indicator is telling you. We have dropped out of randomness. Look right when we dropped out of randomness and started getting some red EPP candles. What's the EPP? This is the R squared between entropy and price action. Right? So when you get a move to the downside like we're having, and it's trend, and you're looking up here at the R squared, what is the R squared? It's the coefficient of determination. It's going to tell you if correlation is increasing or decreasing and what direction it's going. Down. Trend to the downside. Trend to the downside. Okay? We are below the 4-hour power means. Right? We got below them. We barely got up above. Now we're back below. And these things are turning down. The log MAs are breaking them. Right? So this could be the ride down to either 55 or 51. Could all be, you want to take a look at this. I'll be showing this too. A lot of people don't have this indicator. It's not finished yet. But we could either come back up, reject off these MAs as these 4-hour closures continue to happen, and these drop, 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 and the power means drop, 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 drop. So we'll have to see how that's happening. But look what's going on right here, right? Variance is contracting, positively correlated. Price action is going to walk down. That's why that's why this thing is not able to push to the upside right now. 100%. And what else do you see? This is how the Wolfsbane indicator works, right? When you use all this together. There we go. We're a little slow here. Now, it's building, right? This is building. That's all that's happening right now. But what's building? Hidden bear divergence. Hidden bear divergence is a continuation divergence, right? Regular bull and bear divergence is a change in the trend. So learn them. Learn your divergences, but learn them between returns and price action. Whether it be on our returns oscillator, the log returns, the z-score of log returns, that's what this area is right here, or our alpha laser returns, right? These are the returns candles. And like I said on the weekly, this thing's building steam. This thing's building steam. When I see this happening, I'm looking to this 1SD and this 95.4, right? Especially how, let me show you this. You guys will love this one. How many candles back was that? 1, 2, 3, 4, 5. All right, on the weekly, let's go back here to the 41K low. First, I'm going to step this down, get a solid line. I'm going to go back to candle 5. Boop, there's number 1. Step down the 95.4 to candle 5. Step down the projection on the 99.7 and go to candle number 5. Those of you that know what you're looking at, type in the chat what you see right here. What just happened? Right? The bears pushed. Why did the bears push? There was hidden bull divergence. Continuation from this move. That's hell of a continuation. 41K back up to, I mean, where the hell did we go to again? 60, almost 67K, right? A little bit, or that was the high, 67, what did it go to? 67.1. That's a hell of a continuation, especially when you're talking about continuation down there from the 28K low, right? Look where it rejected from. This is why, I mean, I can only show the chart so many times, you know. I show it to people that are trading other ways, and most of the times, instead of asking, they just go silent. What are you going to say about that? When a guy's posted charts like this, they're trying to say, here comes Elliot wave 56 or whatever the hell those people are talking about. Which, hey, man, you want to trade the Elliot wave? Knock yourself out. Wave your money goodbye. Elliot, wave your money goodbye. That's how I feel about it. But you can trade however way you want. I'm not going to knock TA, right? I mean, we're doing TA. We're just doing the TA the algos are using, boys and girls, wolves and she-wolves. 2 weeks of rejection to the damn dollar on the 95.4% Laplace distribution range as this little bit of bear div was building, right? As that little bit of bear div was building. Now, let me load up index. Let's go to the weekly. I mean, it's no-brainer right here. So, not only were we up there, right? Not only were we banging off that projection into 95.4, what's that? Bear div, right? Bear divergence. But look at the variance coming down. So what is this telling me? And what is the histogram? What is the R squared between the returns oscillator and the price action telling me? Because you see bear div on a weekly, right? Strap on, son. Get your red dildos out. This could be a party, right? We could really drop. But considering this variance on the weekly is contracting, negatively correlating, which is telling me that that is going to be some strong resistance for price to walk up, even though price is moving down, and that we're getting a red histogram telling me that what I'm seeing on between this returns oscillator and price action, the correlation is decreasing. So that's another reason why I go over here and I'm like, okay, I don't think we're going to get a move down here to the 68.3 on this projection. Even though that 95.4 is pretty damn close to it, I'm more in line with the 55K area from the read I'm getting over here on the Wolfsbane indicator and price action, right? That's what I'm looking at. All right, let's see here. Plus, yeah, no div there. And you got the low length AVR, mid length AVR expanding positively correlated, right? You've got the high length AVR contracting negatively correlated. Here's what I'm looking, right? We're having a move to the downside, okay? This is still an increasing correlation between the entropy and price action. But when it's not in trend, trust me, if it looked like this is what you're going to see, right? You're going to see one hell of a strong trend. It's random entropy right now, though. And so what is the R squared telling you? Yeah, the log returns are above the mean and increasing, but the dark green is literally telling you that they are starting to decrease. But it's telling you right here in the entropy, hey man, this whole move down that we're having right now is random. It's not trend. So that's when I go over here and be like, I'm nailing this 55K area. That's what I really think is going to happen. If I was getting a different read over here and we were having some expansion negatively correlated, if this variance was coming down positively correlated, right? If this was a blue histogram on this bull div, my tune would change. I'd probably be down here at the top of this 68.3 foaming at the freaking mouth at 50K. That's about what it's at. Foaming at the mouth. It's still a possibility, right? These are all probabilities. It could go down here. Maybe not this week, maybe next week. But look how it's rising. And then that would make sense over time, right? This 95.4 on this weekly. Where's it going to be next week? It's going to be a little lower. But it could be a possibility that the first standard deviation on the new weekly, depending on, we close down here, then you get a 1SD right on here. Go back over on the weekly chart when we get the weekly close and look to see how any of this has changed. All right. It's my rant for the day about Bitcoin. And so now I'm over here. And what do I got over here, right? I'm not going to pull it up on screen. I'm just going to tell you what's going on. And another thing I'm seeing on at least the 4 hour right now. I don't want to look at the 4 hour though. Let's go to a daily. Yeah. So, all right, hold on here. Let me see, screen. Change windows. All right. What you're looking at over here, you're seeing a decrease in the buy pressure. Okay. You're seeing a decrease in the buy pressure. You're seeing an increase in the sell pressure. All right. Now this is on a daily. This again is telling me this thing's coming down. Right? Why everybody else is like, I have no idea where this thing's going. I'm totally lost. Oh, fuck. I got to look at some data set support and resistance lines. Where's this thing going to bounce from? Knock yourself out, man. We deal in probabilities, right? That's what we deal in. We're not Siths. Okay. Bet you like that, Yasha. Let's see here. Let's pop this on a weekly. Little tick up on this weekly on the sell pressure. Little tick down on the buy pressure. Nothing substantial though, right? Let's see here. And there's no velocity and acceleration for the sell pressure. Another thing that I'm seeing right now. There's no velocity and acceleration for the sell pressure. The more I look at all these different charts, let me change back. Let me change the screen. Doo-dah, doo-dah. There we go. The more I look at these charts, the more I'm realizing I like that 1SD. I really do. That's what these charts are telling me. Not on top of Bitcoin's bullish as hell. So why do people that are trading like support and resistance from data sets, why do they always get front ran or get blown through and get wrecked? Look where the 1SD is. Look where the top of this data set is. Where probably a lot of people are going, oh, Bitcoin's going to 51.8. Well, hey, if it breaks through this 1SD, closes this weekly candle below there, maybe next week, like I said, the 1SD is down here. But look where it would be at, and look where the 68.3 is. It's going to blow through that support that they think is real support, right? Volatility didn't create this. I mean, excuse me. Price action, right? Or did not create this. These candles, there's a reason why everything you're seeing here, right? Volatility is creating all this. But the standard deviation of returns is volatility. That's why the only thing you can depend on are these distribution levels. And by next week, there's going to be below that data set. That's why people always get wrecked trading traditional support and resistance lines. Now, I know some people that trade traditional TA and they understand volatility enough to extend that support line, right? They know that volatility is creating these candles, right? And so what will they might do? They might take a support line and just make an entire area, right? Everybody knows who I'm talking about. But once you really truly figure out what's going on with volatility, you'll be doing nothing but looking at these distribution levels. That's just the way it is. That's just the way it is. So, time is it? 2:33. Here's something I want to show you. Here's a prime freaking example of what I'm talking about. The way these markets move. Let's go to all these clownies' favorite little shit coin here, the little Shiba Inu, or whatever the hell it is. Well, where'd that wick go to? What the hell's this white cross? What's this white cross line? Here's the daily right here, right? Here's where we got a new daily. Here was Sheeb's daily volatility range. Price action opens up. The white cross line down here is the 68.3 Laplace distribution range to the downside. It was right on top of the daily volatility price action range. Went up from there. Busted up through. Got really close. This blue cross line is the first standard deviation normal distribution. Look at that as a rejection from that area. Where did it bounce from? The top side of the 68.3, right? So now it's using that as a launch pad. This white cross line right here, that's the 95.4% Laplace distribution range. There was a 95.4% chance this price action was going to stay below that level, right? All the shitcoiners out there were like, no, we won't have that. We're going with the 4.6%. It's going to bust through. It did. It comes down and it tests this level again. Closes those candles right there. Goes up, boom. One more wick down to there. The algos push this thing. Where did it reject to the dollar, or in Sheeb's case, the whatever the hell this thing's worth? There's way too many zeros for me to even comprehend. It rejects to the freaking 0.0000877 level. Perfect rejection. Why didn't it get by this level? Why did the algos stop there? Because this is right where the algos were waiting. All these retailers were FOMOing in on the algo push. The algos flipped their trades right there at the 99.7 and dumped this sucker down almost to back down to the 95.4. But look what happened. They opened up a new 4-hour candle, right? That was the 68.3 4-hour range. Look where it dumped down to. There's the first standard deviation to the downside on that 4-hour candle. There's the second. There's the second standard deviation on that 4-hour candle that just happened to be right on top of the second standard deviation normal distribution. That wasn't enough. The algos pushed it down to the 3SD on the 4-hour candle, and it pumped from there back into the Laplace 68.3% range. Now it's rejecting off the bottom side of the 68.3. Realize this. There's a 95.4% chance in the next 2.5 hours, 2 hours and 23 minutes to be exact, that this SHIB price action closes inside this white cross line right here. There's only a and look, as I speak, this thing's coming down. There's only a 4.6% chance this price action closes above this. Where's the probability? The probabilities are it's going to close inside here. Doesn't have to, but that's what the probabilities are telling you. And that's as a volatility, probability, and statistic trader. That's all we have to go on in a freaking random market. That's why people get so lost. And this is why we use Laplace distribution, right? Because this got outside the 3SD normal distribution, right? Because the normal distribution, when you have a very volatile asset class like cryptocurrency, it likes to move outside of the bell curve and normal distribution. But that 99.7 Laplace distribution range, that shit will catch most stuff. And it did to the dollar. Wouldn't be a bit surprised. How many of these retail traders do you think took their profit up there? None. They're all sitting in the closet whacking themselves thinking, I'm going to be a millionaire. What have they done this whole time? Let's buy more. Let's buy more contracts. Let's get overexposed. Let's get overexposed. Right here, if they didn't get liquidated because of that, they were shitting their pants. And now it went back up. They probably added on again. What do you think's going to happen if this closes inside the 95.4? You're going to see a bunch of whining ass crybabies on Twitter and the Discords going, how the hell did I lose on that trade? Well, number one, you don't know where the distribution levels are and what the probabilities are telling you, man. Yeah, sometimes I'm a rough teacher. But I will get you in the end. I will get you to understand this, people of the YouTubes. So like I said, for Shiba, whatever the hell it is, what is it, Shiba Inu? There's a 95.4% chance this price action closes down below this level right here. Don't be shocked if this thing tumbles down here, right? Don't be shocked. All right. I saw that example earlier. I saw people talking on this other Discord, and then I pop in, and one of our volatility traders who is freaking learning a ton says something about it. But he forgot to post a chart along with his proclamation, so I stepped in and posted the chart for him. Oh, my buddy Sayron, you are a champ. We can tell who's studying and who's not studying. Put it that way. We can tell immediately who's studying and not studying. We can tell the people that get this stuff immediately. Kudos to you guys, man, because this shit is not easy. It takes hard work to learn this. That's why most people would rather just traditional technical analysis, right? For sure, 100%. And hey, man, all the power to you if that's what you want to do. But if that's not what you want to do, Alpha Trading's here for you, man. We'll get you on the right track, right? We'll get you on the right track to trading volatility. All right, let's go back. What is, you know what? Here's one I want to look at. Because I can, in another Discord, there's me and this other guy. He trades he trades a lot of patterns. He trades traditional TA. I trade volatility, probability, and statistics, right? So at first we kind of banged heads a little bit, which is fine. What brought us together? I saw him in the fucking chat telling people to take your profit. I just giggled and went, kudos, bro. We are on the same team. And he was like, yeah. He goes, if you don't take your profits, it's just green candles on a chart and you're going to get wrecked. And I was just like, all right, you're good, bro. Trade however you want. You understand. You understand. You have to take your profit. You have to limit your loss. You can't be emotionally attached to your trade. Because if you're emotionally attached to your trade, like the goofies that are still in this sheblong, you're going to get wrecked. It's just the way it is, man. But let me pop on, and I'll show you exactly what we were going back and forth about. Oh, whoops, I was on the wrong, right watch list. My DeFi, Thorchain. All right. So what has Thor done today? Let's see. We open up the daily. What is this right here? This is the daily volatility range today, right, for Rune. Right, it goes up, immediately comes down, tests the 68.3 Laplace distribution range. And the 4-hour 68.3 was right there, right? The first 4-hour candle of the day. What's it do from there? The algos are waiting there. Up, now let's push it to the 68.3 to the top side. Algos are there. What do then? They drop this thing right down to the S2 on the daily price action volatility range, which also happened to coincide with the 3SD on this new 4-hour candle. Algos hanging out there. Whoop! Let's push this baby back up. Oh, fake out. Boom. What does it do? It goes right back down to the 95.4 Laplace distribution range, to the dollar. And the second standard deviation normal distribution, then makes its way back up, gets up above. This is the 1SD normal distribution to the downside. Doesn't want to do that. So what's it do? It comes back down and tests the top side of this new weekly volatility price action range. Finds support there. They try to push it down again. Not having it. Finally, at the daily volatility range, S1, they pump it off of there. Right? Now look where it goes to during this 4-hour candle. Here's the new 4-hour candle, right? Where did that open at? Opened right here. 1SD, 2SD, third standard deviation, normal distribution, pullback. Last 15-minute candle of that 4-hour candle. Rejected off the third standard deviation, normal distribution. We open up the new 4-hour candle, get immediate wick to the 68.3 on the new 4-hour candle of Laplace distribution, and reject, look at that big doji, right to the 68.3 to the downside, and it pulls back up. Open up a new candle, it tries to get outside of that 4-hour 68.3% range. The algos are like, we're not having it. Where are we going? We're going back down to the bottom of the daily price action volatility range. We're gonna dick around right by the 68.3 to the top side on Laplace, and the bottom side of the price action volatility range. And you can see what happened all through here. This is all inside this daily volatility range. Then what happens? It rejects right here. Algos push it back down to the bottom side of the 68.3, bounce it to the top side of the 68.3. Now we're just dicking around right here, back in the daily price action volatility range. Do I need to show more? Right? No. It's ridiculous. But what I really want to look at Let me go over here on, let's pop this on Rune. Let's check out the weekly here. Let's look at some, where are you, little goofy shit coin? There you are. All right. Oh, and right here on the weekly. So that move, that right, this move right here that happened at the beginning of the week and rejected, what did it reject off of? Here was that daily 68.3. Price action, the top of Rune so far was at the 95.4 Laplace distribution range on that daily candle. Look what else was there. The 68.3% weekly Laplace distribution range. Rejected off of it to the dollar, man. The standard deviation of returns is volatility. Are we starting to get it, YouTubers out there? Huh? With your eyes all glazed over, looking at my charts going, what the hell is this guy talking about? That's what I'm talking about, man. Time to wake up. Time to wake up, wolf pack out there. We're all wolves in a crazy-ass world. Be a fucking alpha wolf, man. Don't be an omega. Don't run with the sheep, right? Run with the big dogs, man. Run with the algos. You think they're omega wolves? No, man. No. They're freaking alpha wolves in great white shark clothing, just eating all the retail traders' lunch. That's what they're doing. Stealing little retail traders that are, you know, all the millennials, all the kids getting into trading today. This is their first exposure to trading. Can you imagine jumping into this shit? You're just like, I don't know what the hell's going on. What are they saying on Twitter? Oh, I should get in Shibu. It's going to the fucking moon and I'm going to make $1 million, and they still haven't taken their profit. What if Bitcoin goes to 50K? You know what's going to happen? Oh, good Lord. This is why we trade distribution levels, ladies and gentlemen. This is why. Let's move this back too. Let's start this projection back here. This was where Bitcoin was at 28K low. 14 bars. And people are like, oh, that shit only works on Bitcoin. Dude, I don't care if you're trading fucking baseball cards and Beanie Babies in your backyard. Make a chart. Make up a chart of it. I'll show you. I will show you that it don't matter what you're trading. Oh, there's not enough. There's not enough history on Rune. You know where there is enough history? Let's see if this thing will populate. What was that? 14. Come on, baby. No. Do I get to drift off? Yeah. Damn it. Not enough, ladies and gentlemen. You know what? We might get a little tricky. See if I can get tricky. Let's put this drift on 30. Let's turn the drift on. Yeah, we got a little projection. Yeah, well, it projected the mean. It projected the mean of this. Look where that mean's at. If it wants to come back and test the mean, a lot of Runeers are going to get their asses jacked. Look at the bear div being built between returns and price action on Rune. And a rejection off the weekly. 68.3. What the heck is going on? Yeah, I'll have to call her back. My mom just had a little bit of a mild heart surgery. She's okay, though. Just a little ablation. All right? They go up, they burn off some stuff. She's doing fine. She's doing fine. She just off her anesthesia, giving me a ring-a-ding. Call her when we're done. I wish this would project, because what are we looking at here? What do you think this is right here on this weekly projection? What do you think all this is right here? That's like the 95.4% Laplace distribution range. I guarantee it. Okay? So that's what I wanted to show. It's not populating, though. But hey, man, it's all good. It's all good. But that's how this rules. I wish I could project one from back here, right? I wish I could do that. But everybody on, since we're doing this, let's do it. Let me go to the Bitcoin index. Okay, we're on a weekly. Yes, we are. We're on a weekly. Yes, we are. Ding, 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 ding. Let's see here. That was that run up, correct? Let me turn off these PB1s. Show you something real interesting. A lot of people don't understand, which is fine. Which is fine. Let me pull all this. There we go. That's what I want for. I need to turn off these levels. Boop. So I can see the price action a little better. There we go. Where is September 15? There it is, right there. Let me do a little quick measurement. Ladies and gentlemen, I gotta turn that drift off. And normal. Boom. Right there. Boom. September 2015. Bitcoin was at about $230. I'm going to show you how powerful these distribution models are to the 20K run up. Okay. Well, now, what was that again? 320 bars. First thing I want to do, switch this to normal distribution. Then I'm going to put this on 320 bars. Whoops, that is the wrong second. Do I have? Yep, I got drift on. And what is wrong here? Oh, I know what's wrong. It's a monthly, not the. Bear with me, ladies and gentlemen. There we go. One more measurement. September 2015, 74 bar. Dum, dum. $230 Bitcoin. Here we go. First, we get a rejection off the first standard deviation. Little pullback. Climbs back up almost to the first standard deviation. Little pullback. This whole time, it was creating divs, right? It's creating bear divs. So we're having these little pullbacks. Woo! We charge up. We close a monthly candle above the first standard deviation normal distribution. 2 months later, when everybody's like, oh my God, this thing's $10 billion, we get a pullback to the top side of the first standard deviation to the dollar. Then it starts going up. Another pullback. This is why people, literally, 90% of retail traders got wrecked on this move. How the hell do you not make money on that? Well, because you're over leveraging yourself. You're getting liquidated on these 30, 40% pullbacks, right? Where did price action reject from? Where did the 20K level stop? Or where did that price action pretty much reject from? Second standard deviation normal distribution, right? Then we get the pullback. This ain't no bear market. Bitcoin's been a bull since the day it was born. We get this nice little pullback back here. Where's it bounce? First standard deviation normal distribution, right? To the top side still. We get that run up to 14K. Then the world leaders that are a scam within themselves decide to unleash some freaking bioweapon on us, and we get this nice big scamdemic dump from the COVID shit. But price action stays above the first standard deviation. Here's where we're at now, right? Here's where we're at now. So let's just take a look at a couple things. Since Bitcoin is feeling good up here. Right? Bitcoin is feeling good up here. So what is that? The end of 2023. Let me get a vertical and do like just a little, I'm just going to eye it where I think this would probably be by the end of 2023. Right about there. What if Bitcoin makes a run to the second standard deviation by January 2023? Got a $450,000 Bitcoin. By the end of next year. So just wanted to show that. Wanted to show you how these distribution models in a random market, right? This is what the algos, man. The algos. Time is at 2:55. Wow. Let's reload that. Shit. Yep. She's like, you're teaching. She's a smart mommy. Oh, wait until I get back there. We'll have she'll be there. We'll get to get her on stream. You'll get a kick out of mom. Oh, good Lord. Let me see. Are we going to reload here? What's happening? Let's reload this shit. Oh, boy. Maybe it doesn't want to reload. Well, screw you then. I'll go back over here. So let's see here. We're on the weekly on the index. Let's see what's happening until the end of the day here. I'm just going to get off that chart. It doesn't want to reload. No problem. So here's the 90. It looks real similar to the 4-hour. We got below the reverse wave trend, popped back up for a brief second. Now we're back down below. What am I looking at over here on our little trend machine? Looks very familiar to the 4-hour, right? We're below the power means. We're below these log MAs. We're rejection. What's going to happen here? You know, could we at some point before this moved down to where I was talking about? Could we test these means? Sure we could. Back up like almost like 60,800. I don't know. I think it's more likely on this run down, it's going to be rejecting off these MAs. Really do. And this low length AVR is contracting, positively correlating going into the end of the day. Kind of flat contraction here, which is saying, you know, what's that saying? Walk up. We're positively correlated on the 2400 though, contracting, telling you down, walk down. And we're pretty much out of trend, but the correlation is to the downside, but decreasing. You see on this 90-minute, this thing dropped back into blue, and the entropy is telling you that we're in the trend again, and we get some more bright red candles. You're going to see this down. Going to see this move down. We had this nice big 90-minute candle here, right? And this candle right here, because the variance is negatively correlated coming down, right? The Z-score, what's it building? Z-score has been building some bull div, right? Especially returns oscillator too. It's been building some bull div, but nothing's set in stone, right? We just got to let it play out. Been building some bull div on the 90-minute on the P. All right, that's going to be a good exit. Let me see here. Let's get rid of this chart. Yes, leave it. Bye-bye. Man, I am getting blown up. Yeah, I got a guy back in Indianapolis. You know, my property's in southwestern Indiana, probably about 45 miles northwest of Louisville, Kentucky. So can't wait to get back there. But you know, there's a guy in Indianapolis got an office, and he's wanting to set up a office. He wants to learn. I'm just like, yeah, man, my plate's pretty full, but I maybe could come up there a couple days a week, teach you guys. Because yeah, he's he's traded forever. But all these guys over there, man, they're foaming at the mouth. He's been calling me for about 2 years now. What do you think about this volatility? Because these guys understand volatility, right? They've been trading options. That's all the option traders trade off of, a volatility. They're not. You think they're looking at TA? You think they're looking at moving averages and stuff like that? No. You're looking at freaking distribution projections. You're looking at volatility reads, right? Are you buying premium? Are you buying premium because the volatility percentage is totally contracted? Or are you selling premium because volatility percentage is fully expanded? These people understand these things. And so I started showing them how, hey man, you should just be trading crypto volatility on low time frames for the win. And he's intrigued. So we'll see what happens with that. But we got a lot of shit going on in alpha trading, so I might not have time. But I can zoom, right? That's what's great about all this technology, all right? It's a curse at the same time. It's good. I can just do zoom. All right. So if you're watching this for the first time on YouTube, we are alpha trading. We trade volatility, probability, and statistics. The link to our Discord's in the description. Follow the welcome message to the yellow brick road, my friends. And all you guys watching Discord, thank you very much. We appreciate you all. And I will see you tomorrow, 2 p.m. Pacific Standard Time, wherever you live at on this big, beautiful blue marble. Have a wonderful rest of your morning, afternoon, or evening. I will talk to you tomorrow.